and invite the first corporate on our show today. That's Mahindra Resorts, Mahindra Holidays and Resorts. They've reported about an 11.5% drop in the profits in Q4. The company's top line too has declined by 2.7%. Joining us is Manoj Bhat, MD and CEO of Mahindra Holidays and Resorts India. Mr. Bhat, thank you very much for joining in. This is Reema here. Let's start with your top line. While for the full year, FY25, you've clocked in a revenue growth of 2.8%. In Q4, things seem to have slowed down for you. There was a drop in your revenues. Can you explain that? And, what was the reason for that? And what can you guide for the first half of the year at least?
So first of all, thank you, Reema, for having me on the show, and good morning to all the viewers. So if you look at our numbers, firstly, I think Q4 is a quarter where there are two things which are happening. I think the India business showed a very strong growth, but I think our Finnish operations were not up to the mark in terms of the performance there, and that's because of the weather pattern changes there and the economic kind of conditions. So that's the reason for the minor drop. But I think if I look at profits, I think if I exclude some of the one-offs, I think the one-offs are pertaining to potentially some of the forex swings which have happened recently, as well as some tax refunds which we had in last year. I think on a full year basis, our profits at the consolidated level, excluding one-offs, grew 37% YOY. So which kind of reflects the core strength of the business. Also, if I look at just the India operations, I think that has shown a 25% profit growth year on year on a full year basis. So I think we are seeing two trends here. So one is, of course, some seasonal variations caused by weather in Q4, but otherwise, pretty much on the bottom line, I think a very strong performance.
Tell us a little bit more about the Finland business, because this is not the first quarter, which where a poor performance there has impacted your revenues. I remember even in the prior quarter. What exactly is the problem, and when will it get resolved? Are we seeing early signs of an improvement there?
So if you look at what's happening in Finland, I think two or three trends. So one is probably the overall economy is not doing well, which if you look at our business, I think there is, of course, the vacation ownership business as well as the conventional hotel business. Those are the two things we do in Finland. I think both of them have been impacted. The second thing is, of course, more long-term is about the Russia-Ukraine situation. And a lot of Russians used to visit Finland, and that's kind of affected the overall business. And the lastly is about some changes in taxation, etc., which has been happening at the local level. So that's come up kind of in the past. I think as we look forward, I think two or three positives. I think the economy is expected to bottom out and start potentially growing. So that's positive for the business. The second thing which is happening is, I think, and this is kind of looking into the future, whether any reconciliation is possible on the Russia-Ukraine thing, and that could be a real positive for the business, because I think a lot of the business was also impacted by, or rather benefiting from Russians visiting it. That should really help the business, I think. And lastly, I think today the team is focused on, the operating metrics at the bottom line and cash management. I think not so much on the top line, because the economic conditions over the last 12 to 18 months have not really supported a lot of top line growth. So that's where we are. I think my own sense is that we are working on this, and I think we will look at the trends which are coming out from an economic perspective as well as a geopolitical perspective. And I'm hoping that that should be an improvement from where we are today.
Hi, Mr. Bhat. Good morning. This is Vinnii joining in the conversation as well. Mr. Bhat, what I want to also know is in terms of the outlook that you have for your quarterly membership, the run rate that you have over there, right? In Q4, I believe you added around 2,118 members. FY25 around 12,393. But Q4 specifically has seen some bit of a decline, right? So what is the run rate expected going forward in FY26 quarterly, as well as 5,000 anytime on the card soon?
So I think, Vinnii, that's from a membership addition perspective, I think it's a broader view we are taking. And the view we are taking is, I think that how do we improve availability overall? So if you look at our last year's summary, right, you're right, at around 12,400 members we added. But also we added a lot of rooms. We added about 520 keys, which is the highest ever in our history. And that what that does is it brought down the member to room ratio. And so it's about 52 members to a room from 56 last year, which has actually helped in terms of making sure that member availability goes up. So that's our first focus area, which is driving better customer experience. The second thing which we did, and I've spoken about this in the past, is looking at which are the kind of members our offering can serve really well. And so we have exited certain markets, exited certain channels during the course of the year, and focused on getting the right kind of membership inflow, which then we can service better over a period of time. I think both of these have contributed to the contraction in memberships, but my own sense is that's probably going to be a trend. I think the past kind of membership addition is not what we are targeting. We are focused more on making the overall customer experience better and premiumization of the product, if you will, which then kind of means that the volumes could dip a bit. But I think if I look at the overall metrics around what we track is average sales value, that's up very, very sharply. In if I look at even F25, it's up about almost 40% plus in terms of average sales value, which then denotes the kind of
Sure.
members we are attracting are more premium in nature.
Right. Mr. Bhat, then if you're focusing also on premiumization, that's one of your strategies as well. I just want to overall understand, how does your margin profile change as well? What is the expectation in terms of FY26 margin overall for the business, as well as, the EU side of the business? What is the EBIT target on that front, given that there was some bit of a pressure there?
So I think let me first talk about I think the overall business at the consolidated level. I think from our perspective, if you look at Q4 numbers, it's been a very strong performance on the India business. And if I look at reported numbers, were up about 72% Q4 to Q4 in terms of PAT. And even if I exclude some of the one-offs, I think it's about 61%. So very strong performance in profit growth in the India business. Coming to the EU business, I think our focus there is to maintain and slightly better performance into going into the next year. I don't think we are building in any dramatic improvements there. But when I combine the two, I think I do believe that our profits will go up. I think if I look at the last full year, excluding some of the one-offs, I think our profits grew about 37% year on year. My sense is that it'll be slower than that, but I think we'll definitely see a growth in profitability as we go into F26.
Okay, Mr. Bhat, thank you so much for joining in with us this morning on the show, explaining us what to expect from the company going forward in FY26 as well. It's a pleasure talking to you this morning. But on that note, we're going to slip into a very short break, and a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.